Welcome to the XY Advisor Podcast, a global community of financial advisors sharing and learning with one another to drive the positive evolution of financial advice. To get involved, go to xyadvisor.com or simply download the XY Advisor app. This podcast series is proudly brought to you by Russell Investments. With more than 80 years of experience, Russell Investments is a global investment solution partner dedicated to helping investors reach their long-term goals. Russell Investments specialize in multi-asset solutions that combine asset allocation, capital markets insights, factor exposure, manager research, and portfolio implementation. Welcome back to the XY Advisor Podcast. I'm Fraser Jack, and today we are kicking off our 5-part series around all different topics around ESG investing, essentially looking at environmental, social, and governance-focused investing. This is a podcast series brought to you by Russell Investments, and we have got 5 amazing speakers to talk through 5 different topics. In this episode, we're looking at some of the marketing messages. In the next episode, we'll be thinking about, is there actually a need for ESG and what is it? We're going to dive deep in the 3rd episode around 50 Shades of Green. Then we're going to look into the E, S, or G and how do you prioritize those. And finally, in the last episode, we're going to be looking at supply and demand. Now, I'm very, very fortunate today to be joined by Philip Moffat. Now, Philip is wears many hats, I guess you could say. He runs a business called Green Road Consulting. He is a director and on the investment committee for Aware Super. He has also got a fund called Beacon Capital, which really looks at the impact investing and businesses that are making an impact on the world. And not only that, he's doing a PhD in one of my favorite subjects of all time, the psychology and behavioral finance and decision-making of human beings. Welcome, Philip.
Thanks very much, Fraser. One of the biggest issues I had to face was to decide whether to join this or not. And it was a quick and easy decision to be involved.
It certainly was. Well, we sort of looked at you and go, well, hang on a minute. Is there anybody that knows this topic better than you? So fantastic. Thank you for spending some time with us today. Now, this first topic we're kicking off is around the concept of the marketing and promotion and the noise that we're hearing in the marketplace. I love using the phrase "so hot right now" when it comes to ESG. What are you hearing and seeing in the space?
It was Hansel was so hot right now, right?
Yeah.
That's exactly right. Institutional investors in particular, but organised group of investors globally are focused on what they loosely call ESG, and they're focused on it for a couple of reasons. Number one is because globally the understanding is growing that assets, not just companies, but assets produce more than just financial returns. They interact with communities. They produce kind of what an economist would call externalities. So they might pollute, or they might create jobs, or they might educate kids, or, there can be good and bad stuff that they do. And so loosely they can be grouped into environmental impacts and social impacts. So that's E and S. And how do we think about companies or assets managing those impacts beyond the financial returns? Or that's G, that's governance. So loosely those 3 letters get bandied about to try and help investors think about something that's above and beyond just a straight financial return from an asset.
Yep. We're seeing a lot of marketing in this space. Obviously, a lot of companies have got statements, a lot of funds that are coming out are making statements. How do we make sense of all the statements? How do we find the message within the noise?
Yeah, so I'd go back one step and say, why does ESG matter apart from feeling good and talking broadly and loosely about social license and all that kind of stuff? ESG matters because markets increasingly, or investors increasingly, understand that unless businesses and assets are sustainable, their values will be reduced. And so you want to be investing in assets that not only generate good returns, but they generate sustainable returns. And what's going to sustain a business or an asset, it's not just its financial returns, it's also the role it plays in our community. And so the obvious example is carbon pollution. So increasingly carbon output can be measured, and in some jurisdictions it's taxed, in others it's not. But if you look at an Australian asset that has a big carbon footprint, it actually trades at a lower valuation than a similar asset with a lower carbon footprint. So as an investor, whether there's a carbon tax or not, you want to know about the carbon footprint of the asset, because it's going to affect the return you make. And so for investors who are driven by total long-term returns for their clients or themselves, ESG is really, in my mind, it's shorthand for sustainability. It's just a way of thinking about sustainability. Sustainability is broader, ESG is narrower and easier to measure and address, but it's really all part of the same thing.
Yep. And how do we dive through some of the messaging? I think sort of this episode, I really want to try and knuckle in on that whole what's being fed to the marketplace, and how do we make sense of it?
Well, look, if anything's popular, frankly, people will try and find shortcuts to get benefit out of it. I don't want to, necessarily imply that it's exploited, but we're in lockdown and there's COVID going on right now, and I'm getting text messages every few minutes from people who are telling me they've got a COVID test result and they're just trying to get into my phone and rip off my personal data. So that motivation to try and get as much as possible for as little effort out of movements or brands is endemic to the way we live our lives. So that's the kind of psychology and behavioral finance part of it speaking. In terms of ESG, companies, in particular listed companies, who are being evaluated and have to report according to certain standards and so on, they're addressing the issues by firstly producing some measurements that are ostensibly there to try and help investors gauge what their impacts might be in those areas. And secondly, they're going to make a lot of statements about what they're going to do in the future. Now, what you're going to do in the future is no different to what you get from a politician speaking or a coach talking about next season or whatever it happens to be. It's not really much use to you unless you can see some evidence of it taking place. So I discount all of that.
So what you're saying is past performance matters in this particular is more of an indicator of future performance?
Yeah, exactly. And so you want to see that plans are being put in place and so on. I think what we get from ESG from people who are embracing it properly, both on the investor side and the investee side, is they start to focus in on a couple of things that you can measure. So I think about carbon footprint, for instance. There's essentially broadly agreed kind of metrics that can be applied, and so that you can start to make some comparisons. E is probably easier to manage than measure than S, the social impact, but you can still talk about the number of jobs or the healthcare or whatever it happens to be. You can put some metrics around it. And G is more an internal structure. What I think you're getting at is, should we be trusting some of the product that's being created around these thematics, and should we be trusting and investing on the basis of the promises made by the asset, the companies and the assets that we're investing in? And I would encourage skepticism around all of that, but also the fact that it's starting to be discussed and there's some metrics emerging is a positive. This whole triple bottom line, quadruple bottom line process isn't going away. So we're on the pathway. The biggest problem for greenwashing or ESG washing and whatnot is that there's no real agreed set of metrics. So you can come up with your own metrics and publish them, and they'll look good. But when you drill into them, maybe statistics, what is it really telling you?
Yeah. Okay. So the idea is to really look hard at the messaging and say, is it a gunner? Is it something that's sort of or very vague, or is it something more specific and tangible?
Yes, exactly. And the more tangible it is, and the more that it can be evidenced by actual data that reports what has happened rather than what we're planning to do, the more credit the market will give, and the more the companies move that way, the more credit for future plans will emerge. And the real coalescence of all of that will be when it becomes more and more clear to investors that you can actually make financial returns out of all of these things. So there's still this residual view, I think, in investors' minds that ESG, sustainability, impact, whatever terms you want to use around of it, might come at a cost of financial return. I think the revolution has begun and will emerge that what we see is that you don't make reduced financial returns, you actually enhance financial returns by embracing all these issues moving forward.
Yeah, fantastic. And I want to get into that in the next episode as well. But just on the idea of where consumers are right now, what's the messaging that advisors should be using in this space then if they want to lean into ESG investing as something that one of their philosophies to promote to the market or to their clients?
Well, I think the first thing I personally would have would be that the whole idea about ESG is that it's just a somewhat simpler group of measures to attack this whole issue of sustainability. The sustainability of businesses and assets will drive returns from those assets, and so that's something you want. So here's an area we should be focusing in on, number one. Yep. Number two, you really want to be looking for organisations that are trying to measure in some form these components, and that they clearly explain how they're measuring them, what the framework they're using is to try and avoid any washing that's going on or any kind of taking advantage of the thematic. And the third is to insist really that those that you are working with who are not talking about ESG in their portfolios or measuring it, that you think that at some point in the future this will be essential for your clients to remain involved with them, so that it's not going to be an optional. It's just going to be an essential. And to be honest, if you go to the big world, that sounds really arrogant. I don't mean that, but big pools of capital. So the big supers globally, not just in Australia, particularly in Europe, it's not and they do ESG as well. If there's no ESG measurement or understanding for the assets, they just don't even qualify to be looked at.
No, very good. And so you mentioned sort of greenwashing, which is obviously a bit of a theme that's has a lot of conversation around that at the moment. So this is greenwashing from fund managers down or companies outwards. Is it also something that advisors need to be careful of with their own messaging?
Of course, yeah, absolutely. And one person's greenwashing is not another person's green. So sometimes I talk to people about there being high church and low church in this space. There are some people who have set themselves incredibly high standards that are actually quite difficult to meet, and that limits the pool of assets or businesses that you can invest in because they've got to meet these very, very high standards, and that's great. But the vast majority of the assets and businesses aren't going to achieve those high standards on day one. And so moving them towards a better outcome, personally, I think that's a great objective for investors to have. So working with people who don't really understand their ESG but are improving it and embracing it is a really valuable thing to do. So you've got to make a decision as an individual whether you want to work with a broad group who are getting better or you're only going to work with the ones who are good already. My preference is to try and move the bulk, but I understand that there'll be some people who are, who just want to be involved with the very highest church.
Yeah, I can get that too, and I can understand that means an advisor's role is to find out where that client sits.
What the client wants.
Exactly. Yeah, what they want in that space, and whether they want to help influence or whether they just want to sit in the space that's already been there, done that.
Yeah, well, so let me give you a really obvious example. We need mining. You're going to mine stuff, even if it's to make batteries for cars, you're going to mine stuff. And so you don't need oil or coal maybe, but you do know. So I'm not going to invest in any mining. Well, then you're not going to get electric cars. So are you going to invest in a miner who's improving their environmental footprint and at the same time bringing us technology that's going to reduce greenhouse gas emissions and so on? That's the kind of conversation you need to have.
Fair enough. Okay, very good. Deeper conversations. I love it. Philip, thanks for catching up on this episode. We look forward to hearing from you in the next episode where we get into is there an actual need for ESG, which I think you'll have a lot to say on. So look forward to chatting to you then.
Thanks, Fraser.
Welcome to this episode, Elizabeth Hatton.
Good morning, and good morning or good evening to everyone who's listening. My name is Elizabeth, and I run a small financial advice practice called Viva Financial Advice.
Fantastic. And you've been running that practice for a few years now, and you sort of have a bit of a lot of conversation with your clients around ESG.
I do have quite a lot of conversations with clients about ESG, and people are quite fired up about ESG and what it means, and they're fired up about being ethical. And ESG and ethical and sustainable investing isn't just ethical and sustainable investing, but some people come to see me because they say, "Oh, you're ethical," and I'm talk to them about what their ESG preferences are, and they say, "That's not why we came to see you." And so there's a lot of, I think the issue is that there's a lot of mixed messages about what ESG actually means, what ethical actually means, what people's interpretation of it is, and therefore what their demand is when they come to see you. But from my point of view, People come to talk to me because they have a problem. And that can be any one of a number of problems that I can or can't manage or help them with.
Yep.
And ESG and looking at the ethical and sustainable investing is one way of helping them move through what the financial solutions to some of their problems might be.
Yep, fantastic. And in this episode, of course, we're focusing on the messaging and the marketing and all of the promotion that goes around ESG. There's two sides to this story. Really, there's the marketing and promotion information that's fed to financial advisors themselves from the fund managers, and then there's the messaging that comes out to consumers. Tell me about the consumers coming to see you. We'll start with consumers. When consumers come and see you, what are they hearing, or what are their preferences around ESG? How are they being communicated to?
They're hearing that ESG and ethical investing is something that they can do and that they're already doing. And when we actually go into, and it's something they're wanting to do, and so there are people who are wanting to do this with various amounts of conviction and passion, and I think that often when we start to dig into the details of what they're actually investing in, they're surprised that their super or other investments aren't as ethical as they might wish them to be, or they would be hoping. Yep.
This is a really interesting point, isn't it? The uncovering this, and we're going to certainly uncover this with some of the other episodes of conversations we're going with. But do you feel like that some of the information that they're getting in this space, then in that case, is not quite on the money or on the mark?
It is certainly not quite on the money or on the mark from a purist point of view. But it may well be on the money or on the mark in terms of the various options that, for example, a super fund may offer. They may offer something that is more ethical or has got better ESG flavour than other sort of holdings or asset classes that are on offer, but it may not actually be as green as what it is that the client is wishing.
Yep. And is this also the case for the information that's coming out of, the fund managers, or the information that's being fed to financial advisors around what is and what isn't? And is there a perception versus reality conversation to be had here?
I think that there can be, and I think that quite a lot of the time there is. And people or fund managers who adamantly say, well, yes, we do things that are particularly green, often aren't. And they don't necessarily want to have that conversation with you about what it is that they're actually doing and their asset classes, and the way that they're engaging with companies that they invest in to try and make sure that their governance practices are principled, shall we say.
Yeah. So how do you dig deeper into that? How do you find out what's the underlying ESG components are if everybody's sort of saying that they are?
I belong to a couple of groups that are particularly interested in this. One of them is the Responsible Investment Association of Australia, and the other one is the Ethical Advisors Cooperative. And I actually do quite like digging deep. I actually like to go into a fund and see what their major holdings are. I like to see if they're transparent in terms of their holdings and the way that they're reporting. I like to see what their voting record is on sort of particular ethical and sustainable issues. And I also like to see what their governance practices are like and if they're actually moving along the lines of what their policies and philosophies say they are.
So this really falls back on you as the planner and a couple of groups that you are part of to go and find these things.
There's quite a lot of research literature available out there, and I think that the issue is that the research effort and doing this sort of digging fairly deep is limited because it's pretty intensive. But there are a few databases out there that you can look at, and I find that the products that are out there that are reasonably deep green are limited. And of course, some of this is also driven by what it is that the clients want and what they have in their own particular mind. And then that goes down to the issue of sort of what level of risk can they tolerate, et cetera, et cetera, et cetera. Because there's what it is that people are wanting to invest in from a values point of view, and also what they need to be doing in terms of their life generally to make sure that they can live in a reasonable way. And those things often need to be negotiated or rejigged.
Yep. So the messaging coming out of that you're receiving as an advisor, do you often find that's correct, or are you finding that that when you dig deeper, it's not quite the case?
Sometimes it's correct. Okay, about 60 or 70% of the time it's correct, and 30% of the time it's not.
Is there a little bit of marketing that goes along with that sort of says, oh, we don't do this or we don't do that, but then again that could be something that nobody does that or nobody does this, or that's just not even a thing that exists?
I think that sort of that people say we don't do this and we don't do that, but then nobody does that anyway. So that's part of the marketing thing anyhow. But I think that the issue is that fund managers and funds want investment, and so this is a marketing exercise to actually get clients' money invested in their particular option. And I think that because it's the flavour of the month, or probably the flavour of the year, then there's a big impetus to try and make your product as attractive as possible.
Yeah. So what tips would you give to advisors in that space where they're wanting to go deeper into the green, let's say? What tips would you give to them about the marketing messages they're hearing in the market at the moment?
I would suggest that you don't take anything on face value.
Yep.
And that you actually have a look at some of the background information. I mean, I think that the two good places to start with all of this are the RAA and Ethical Advisors, Advisors Cooperative. They've got all of their stuff up there on the web. There's leaf ratings that is voted on by a number of ethical advisors as well, that actually rates funds in terms of how green they are on an ethics only perspective. And so what you should do is look for funds based on their ethical credentials, and then look at the fundamentals in terms of finances down the track as a screening method. Yep.
Fantastic. Thank you, Elizabeth. We'll catch you in the next episode where we start talking about is there an actual need for ethical investing in ESG? Really appreciate your time. Welcome to this episode, Paul Garner.
Thank you. Appreciate it.
You're very welcome. Now tell us a little bit about yourself. I've noticed you've been an advisor for 15 odd years, and you're working in South Australia.
So I career changed into financial planning in 2007, and a boutique practice gave me an opportunity. They said it was at the height of the market in 2007, and they said they couldn't find anyone suitable. So if I was prepared to start at the bottom, they'd give me a go. So that's what I did, and worked with them for 3 years and saw the absolute top and then the absolute decline of the GFC, the slow train wreck that it was, and worked with them for 3 years, and then and that finished, and then worked for Westpac for 3 years, and always had the ambition to begin my own practice. And slowly I developed that thought into also wanting to specialise in ethical and responsible investment.
Yep.
When I eventually went on my own.
Yep.
And so I saw the best of financial planning in the boutique practice, and then the bank was fantastic for a little while, and then just went the other way, which is the whole.
I kind of feel like you did two short apprenticeships in that space. The idea of working for a small boutique and then a large bank, and getting a whole lot of different perspectives, and then being able to set up the business that you wanted within the ethical investment space. Now, you're also an advisory board member of the Ethical Advisors Co-op, which I'll ask you about throughout the series, and you're on the FPA's Policies and Standards Board as well.
Yes, one of their board committees, and so. as a relatively or as an older person, but a relatively young financial advisor, I just thought I'll get stuck into everything I can to try to learn and be part of it and try to influence the policy and the way things work, or get an insight into how things work.
Yep, brilliant, absolutely. Now, in this particular episode, we're talking all sorts of things around ESG, but we're talking about messaging, marketing, and promotion. And this probably, you mentioned a career change. You were a marketing manager prior to that.
Yes. I've done a number of things, but that was my last career iteration. Prior to that, marketing management in IT companies mainly, and then had a couple of stints in government.
Yeah, fantastic. Now, so you'll know exactly what we're talking about when it comes to messaging and marketing. We're sort of covering off a lot in this episode around the concept of greenwashing, perception versus reality, the messaging that's out there. I keep saying this in this episode, but so hot right now. It's a hot topic, ESG. Talk to us about what you're seeing around in the space, and how do you make sense of it?
Yeah, look, I started in my own practice late 2013, 2014, and that whole concept was not well known. The myths about you have to sacrifice returns for the ethical values was very prevalent, and there were just a few themed managed funds or filtered managed funds. Otherwise, it was a compromise in trying to match someone's values to their investment, and the change over the last since then has been amazing in terms of the amount of funds available, the themed funds. So, human nature is that when there's a hot topic, there will inevitably be people this looks good, let's ride along that. And so that's been part of, the due diligence, the vetting of looking at options to help match. There's always a match with people's values. So whatever's out there, it's that match between what's there and what people value, or what they want to avoid, what they want to support, and then finding that right mix. So there has been a dramatic increase in ethical themed funds. So part of the work that we do as an advisor specialising in that area, and also with the Ethical Advisors Cooperative, is we vet fund managers who bill a financial product with that filter, and we assess them as to what's good about them, what's not, and then that gives us and the community in general an idea of, well, here's a fund with ethical or ESG or sustainable or whatever in the title, but what does that actually mean? What's underneath that? And there's different funds have different compromises that they will make to fulfill their investment guidelines as well as the ethical filters. So they'll make that decision based on what they think it should be, and then it's up to us as advisors to decide whether, okay, if that's appropriate for the person we're talking to, and if there's compromises there, if they're comfortable with those compromises, then that type of fund might be suitable. I guess the best greenwashing I've seen is where an Australian share fund had ethical or whatever in the label, and they said their main exclusions was tobacco and armaments, and neither of those things are manufactured in Australia. So it's like, okay, well, what's the difference between that and just a regular Australian share fund? But that didn't last long.
Yeah, that's a really interesting one, isn't it? No, we exclude tobacco and arms from our Australian share fund. Excellent. So does everybody else, because there is none. Yeah.
Yes.
It's interesting the marketing spend, and that's what I mean. Like your marketing background history, you try and find a thing to the thing about the product to promote. But you mentioned the idea of the work that you're doing with the Ethical Advisors Co-op in going in and then looking at those messages and then bringing them to light. How can people sort of find out about that or see more about what you're doing at the Ethical Advisors Co-op?
Yeah, so that's a group of advisors who share the same ideals, same passion about the industry, and we work together to encourage the industry to develop appropriate products, to vet existing products, and to work with financial fund managers to develop or enhance their existing products to be more suitable. So Ethical Advisors Cooperative is, we have a website, and we have recently, or within the last 2 years, developed a leaf rating system where we as a group will investigate and vet fund managers, and then we vote on it and give it a leaf rating. So 5 leaves is the ideal, and so we base it on what an average, so it's very subjective, but what an average ethical advisor would think of the investments within this fund.
Yep.
And so we rate that, we give that feedback to the fund manager, and then they either take that on board or they state their case, and we try to rate it not on a investment performance criteria, that's plenty of other people do that, but just on how we assess its ethical filter.
Yeah, now this is interesting because we'll probably get into this a bit deeper in some of the other episodes, but as you mentioned, it is subjective. There's no guide, there's no exact science to this. Talk to me about is 5 leaves deep green, or is that where you're looking? You're looking for deep green as 5 leaves, and one
Correct.
leaf is very light green.
Yep.
We'll probably cover off on that in the 3rd episode when we talk sort of 50 shades of green. But
Yes.
That's a fantastic system. And what's the website for the Ethical Advisors Co-op?
Ethical Advisors Co-op or leaf ratings. We'll search on those terms, and it will get straight there. I'll let you know the exact address.
We'll include it in the show notes. Speaking of marketing messages, what should advisors be doing with their marketing messages when it comes to what they're saying to their clients, or what they're saying to the people that might become clients of this?
Well, look, I specialise in this area, so all of my marketing messages are around this area. So I'm looking to attract people who have that interest and want to reflect their values through how they're investing. So for me, it's a specialty, and I think if you're going down that area, you've got to focus on those issues. If you're not obviously specialising in that area and people are asking about it, then I think that's probably more prevalent these days, and that the greater awareness of it through the media, through social interactions is making it more high profile. But I think if you're wise about it, you're going to have to specialise in that area and make that messaging to do with that, and to expand on that issue for yourself. I don't think you can dabble in it.
Yeah, it's interesting, isn't it? I sort of feel it's it becomes your investment philosophy, and something that you then promote as a bias almost in the way that you select funds, because I personally have this bias for the outcomes of ethical businesses on society, which we'll sort of get to in another episode, or the next episode. But if that's the case, then you will attract, and you outwardly say, this is my personal investment philosophy. That's my personal bias when it comes to my financial planning, recommendations. So you will then attract people who also agree with that.
Yeah, but I don't make any judgment. It's purely about whatever the values that the individual has. It's about matching that with what's available.
Yep.
So and that's as different as, and that's the subjectivity of it, because it's so different from person to person, is what's important to them. What do they want to avoid? What do they want to support? What don't they care about?
Which we're covering in another episode. So what we'll do, Paul, we'll leave it there for this episode, and we'll look forward to catching you in the next one.
Thank you.
Welcome to this episode, Alexandra Brown.
Thank you so much for having me today, Fraser.
Fantastic. Now, you're an amazing person in the space. You run you're the founder of a business called Invest with Ethics, where you actually work with financial advisors, helping them shape their businesses around, providing ethical investment advice to their clients.
I do. I absolutely love what I do. I get to work with some of the best advisors who are really passionate about helping their clients in the ethical investment space. It's a wonderful place to be.
Yeah, fantastic. And of course, you do that through all sorts of one-on-one and accelerators, and we'll probably dive into a bit more of the stuff as we go, of all the stuff you do around in this space with the Ethical Advisors Co-op, of which you do a lot of support and you're on the board with. And also as a research manager of an entity that I can't pronounce. Let's go with that. Tell us about that.
Sure. So I am the head of research at Altiorum. It's a sustainable online finance library. And we basically or effectively take all of the great research that's out there on ESG and ethical investing. We summarize it, pull out the key insights and transform it into a really digestible format for users and for advocates who want to create change in the industry.
Yeah. And you pretty much spend your entire life around this one subject, right? Including all of your study.
I do. I was about 10 years in academia prior to that, doing lots of research on ESG leader and laggard portfolios and all sorts. I live and breathe it, absolutely.
So have you done your PhD? Is that how?
I did my PhD research. So I did 3 or 4 years of a PhD, and unfortunately there was a researcher in Queensland who published a report that was too similar to my own research. So it was no longer a unique contribution, and we tried to pivot and we tried to reinvent it, but it was too late by that stage. It wasn't going to be unique.
My goodness! So 3 years into a 4-year study, and otherwise I could be speaking to Dr. Alexandra Brown right now.
You could, and no doubt you will in the future. I actually purchased the dralexandrabrown.com URL, so it is on the cards. It's going to happen one day.
That's a good way of putting it in your brain, so it's going to happen. Excellent. So, all right. Well, I won't call you doctor, but we kind of know that you're pretty at that level, I guess you could say. Let's kick off this. In this episode, we've done a lot of talking around the concept of marketing and promotion and some of the noise we hear in the market at the moment. Tell us what are your thoughts on what you're hearing?
Yeah, it really is. It's so hot right now. And I think it's because there are so many drivers happening at the moment with, the global trends and consumer demand. Climate change is at the forefront. Fossil fuel, divestment movement, net zero emissions targets, COVID. COVID's really brought around those social issues in prominence. There's guidance from financial regulators. And of course, this all means that fund managers are really getting on board and they're fighting to get in front of advisors. So it's in the media, but you mentioned the co-op and, you say that it's so hot right now, but the co-op's actually celebrating their 10-year anniversary this year. So, for a long time, this has been at the forefront for a number of advisors who recognize the need to represent and I guess advocate on behalf of ethical and sustainable investments and clients that wanted this as well. So, yeah, it's hot right now with fund managers and advisors, and the media's catching up, but it has been there for a while.
Yeah, that's a really interesting point. Anybody can be an overnight success in 10 years, can't they? It's sort of one of those scenarios. If you stick to your guns and you work at it, I think that's. I hear that a lot with stuff. Things that are booming don't just boom out of nowhere. There is years of history that go behind it. So yeah, that's a good point to make. And you're right. There are a lot of marketing departments jumping on the bandwagon and messaging. What sort of messaging are you seeing at the moment that could be considered to be, a little bit of greenwashing?
Oh gosh, there's definitely a lot of greenwashing, and simply put, it just means that a company or fund they're using words, they're using PR, they're using imagery that makes them seem a little bit more ethical or environmentally conscious than what they are. I think some of the examples would be fund managers stating that they screen out certain things like fossil fuels, but they only screen out certain types of fossil fuels. So they might only be screening out coal, but gas is still, in the portfolio, or their screening thresholds are really high. So, fossil fuel companies are still remaining in the portfolio. I think for mixed asset portfolios as well, the screening process is only perhaps used on the equities portion, but not on the fixed income portion. Other greenwashing examples that I'm seeing is, saying that they're ethical, but then they're not voting against all the resolutions that are asking for increased climate change disclosure, or they're voting against changes that are put forward that would support human rights and workers' rights and Indigenous rights. And I guess one more would be using vague language with no conviction behind it. I recently read a responsible investment policy, and without a word of a lie, it said it seeks to limit most carbon intensive fossil fuels. And I was just like, what does that even mean? So I would like to say though that there is a lot of greenwashing, but it's not always deliberate. There are funds that are moving into this space too. And, through my work with the co-op, I've seen so many improvements, and sometimes the co-op will go to a fund and they'll bring, to attention something that could be improved, like better disclosure or what have you. And the fund will improve that, or vice versa. A fund will come to the co-op and say, like, what do they need to do? What are clients looking for? What is best practice in this area? So I think that, there are a lot of funds that are trying to do the right thing. So it's not always deliberate greenwashing. And I think it provides a really great opportunity there for dialogue between advisors and fund managers to actually improve together as well.
Yeah, it's interesting, isn't it? The seeks to limit most. I love that. That pretty much means you can do nothing, and you could still say you were seeking to limit most. But you're right. You're absolutely right in that space. There, that's turning a ship, right? There, a lot of fund managers don't have the ability to turn on a dime, and to be able to do the right thing. It sort of takes a bit of turning, and maybe it's being led by the marketing. But I guess what we're doing now is we're holding the marketing accountable, aren't we? For, okay, you said last year you're going to do these things, and you haven't done it yet. Therefore, there is the problem.
Yeah, absolutely. Accountability is a great point.
Yeah. So there's a fair bit of noise out there. Talk to me a little bit about how you work with planners and what you say to them with regards to the messaging that they could be putting out around ESG.
I guess, if an advisor is providing ethical and responsible investment advice, firstly, they're going to stand out without a doubt, and they can use that to their advantage. Absolutely. It's a great positioning for themselves. Currently, if you go to the RIA website, which is the Responsible Investing Association of Australasia, there are 29 certified financial advisors with RIA, and 7 of them are in New Zealand. So it's only 22 RIA certified advisors here in Australia. And in the Ethical Advisors Co-op, there's about 36 advisor members. And, granted that there are some advisors out there who specialise in this space, and they're not certified by RIA and they're not in the co-op. But to put this into perspective, there's, I think, about 19,000 advisors in Australia, So if you're in this space, you are positioning yourself as a leader in this space. And there is so much demand for ethical investment advice. And so, just these numbers alone show good reason to get into the space and stand out. But I think as far as positioning themselves goes, similar to the expectations of fund managers, advisors should be transparent about what they can actually provide in this space. So no greenwashing for advisors as well. They can use their websites, use their communications, social media, client newsletters to really highlight the ESG issues that are covered in their advice, that they specialize in, that matter most to their clients. Advisors running events, webinars on ESG topics, and to really demonstrate expertise. And I think it's just the best opportunity to really just highlight the extra value that you offer in your services. Are you building portfolios that are aligning with the client values? Can you assist your clients with proxy voting and advocacy campaigns? And there are so many benefits to providing ethical advice.
Yeah, I really do feel it's a conversation once you get into it. That if this is your passion and your belief, then that does resonate out into the marketplace. I was talking to an advisor the other day who'd been on a few different podcasts and said that that clients were listening to those podcasts first, and then coming along and saying, you believe in what I believe in. I want to be your client. Obviously. And I can consider anything like that, any investment philosophy that somebody has is a philosophy. It's essentially a bias, but it's a good bias because it's upfront and it's transparent, and then people can then resonate towards that.
Yeah, absolutely, and it is. You're right. It is working with purpose. Aligning your role as advisor with your own values too, which is so great. It's meeting the client demand, meeting those expectations. It's increasing your connection with clients, in so many ways, building those deeper, longer lasting relationships, growing trust, growing loyalty. But overall, being an ethical advisor, it is a marketable strategy. So it's seen as cutting edge. It's simply just by being across these things, it's a selling point for you as an advisor. So it's not only an effective client retention strategy, but it would also help you stand out to potential clients.
Yep. Now, in your research and any of your research, have you done any ideas around what percentage of the client market are interested in ESG?
Yes, I have.
The only reason I say that is because you gave us the stats on the amount of people who specialise in this space versus the number of financial advisors, which is obviously a huge one. So we might see if we can get that information out of you in a future episode. But in the next episode, I also want to jump onto that and have a bit more conversation around that alignment and purpose, because I think when we talk about if there's actually a need for ESG, there's also a fantastic opportunity for advisors to align their business with their own values. So, Alexandra, thank you so much for coming on this first episode. We look forward to hearing from you in the rest of the series.
Thanks a lot, Fraser.
Welcome, James, to this episode on we're talking all things ESG. Thank you for being with us today.
Thank you, Fraser. Good to be with you.
Fantastic. Now, James Harwood, you are a senior portfolio manager with Russell. Is that correct?
Yes, that's correct. Fraser, I'm running Australian equity and global equity funds for Russell. Have a specialisation in ESG strategies, so running both our ESG ETF RARI and also some of our low carbon funds in both Australian and global shares.
Fantastic. So you're the expert in this field. Thank you for joining us today.
Yeah, no. Look, it's been a great area to be involved in over the last few years, and I think the great thing about ESG investing is it's always evolving. So it's probably the most exciting area of investment at the moment.
Yes, it certainly is. It certainly is evolving. It certainly is one of the hot topics around at the moment as well. We're sort of talking a lot of things today in this episode around the marketing and the messaging and the promotion that's going along. There is a lot going on, isn't there?
Look, there is. There's. I think probably the best reflection is just the flows of money into these ESG strategies. We're seeing that, particularly in Europe, definitely in Australia as well, and I think the US is starting to finally catch up as well. So it's not been a big theme in the US. I think with President Trump, it was clearly ESG was not a focus of his, but I think even investors over there now are really following this kind of ESG trend as well.
Yeah, well, it's good to see Australia as one of the world leaders in this phase, I guess.
Yes, no, for sure. I think the superannuation money that we have, the super funds have big ESG teams. I'm sure we'll be talking later about some of the investor groups and how they influence companies, on their governance and corporate practices, and definitely. The wealth of money that we have in superannuation and the teams behind that is really helping drive the ESG trend in our market.
Yep, exactly. Now, there's now speaking of the promotional side and the marketing side, there is a lot of information out there. It's a topic that sort of came along pretty quickly, as in the marketing promotion really ramped up around this sort of not so long ago. What are we seeing out there with regards to some of the noise in the marketplace versus I guess I'm trying to look at what sort of perception versus reality.
Yeah, look, I think it's a good question, and I'm sure one that's on the lips of a lot of advisors as well. I think most investment firms are now saying that they invest with ESG considerations in mind, or integrate ESG into the investment process. I think the question is, what does that really mean? And in terms of products, how to really avoid greenwashing. That's a term that's become quite commonplace, and greenwashing is really the overstating of a product's ESG credentials. I think what's really important for advisors is clear product labeling of a particular product. How green is that product? It's certainly something that we spend a lot of time thinking about at Russell, in terms of the information we provide on our ESG products, in terms of fact sheets, etc. What characteristics are they providing ESG-minded investors? So I think that product labeling aspect of particular investment products is really important to avoid greenwashing, basically.
Yeah, and is there a bit of a benchmark around with that, or how do they tell the difference?
Not really is the honest answer. I think there's a number of different metrics that we measure our funds against. So, for sure, carbon emissions and carbon footprint, that's a fairly standard way of looking at how green a product might be, or how exposed to carbon it is. As this trend away from fossil fuels has gathered steam. That's something that investors are really wanting to know now. What is the carbon footprint of their portfolio, or the fund that they're investing in, relative to a benchmark like the ASX 200? So that's something that's certainly the kind of things that we're doing now as standard, really.
Yeah, it's I guess it's trying to bring some factual information to from what I've been speaking about and hearing. It's about bringing that factual information, and you sort of mentioned the words like with considerations and in mind. They're all nice, and they're nice fluffy words, but they don't actually mean anything, do they? They're sort of we're looking for the tangible stuff.
Yeah, that's right. And I think probably the most common thing now is that all investment firms say that they consider ESG in what they're doing. What does that really mean, and what's the end product? And I think governance, or the G of ESG, has been a key part of stock pickers for forever, really. They've always been focused on the governance of companies, but I think the environmental side, the social side is becoming more and more important to investors. And we do have aggregate ESG scores that we can also rate our funds on. So the RARI ETF, for example, we always compare how that scores on overall ESG characteristics versus its benchmark, the ASX 200. So clients can see there is an improvement over the standard kind of market index.
Yep. And so it's obviously, this is a world that advisors are looking at navigating. There's the commentary around it and the marketing and promotion. What sort of tips would you have for advisors, or how can advisors help to cut through the noise?
Yeah, I think probably the first thing is to really understand what their clients are looking for. One thing that I speak a lot to advisors and with our sales team, trying to understand, where a client sits on that ESG spectrum, or what kind of shade of green is that client looking for. So I think there's kind of one end of the spectrum is the really dark green, where clients might want to have nil exposure to mining companies. At the other end of the spectrum, people want better ESG characteristics, but they don't want to kind of take huge risks by not owning a lot of the mining companies, etc. And mining is clearly a big part of our economy. It's really important to Australia, and all of our ESG funds, whilst there's often some kind of fossil fuel related screen that we use in those strategies, we still have exposures to other companies, say like a Fortescue Metals that's it's iron ore focused. It's not focused on fossil fuels, and I'm sure you're aware that that company is really making significant investments in renewable technology as well, with hydrogen, etc. So I think our opinion is that certainly miners are not all bad. That's the wrong perception, and we haven't designed those really dark green kind of products for that reason. I think a lot of these companies will be solutions in the energy transition as we kind of move to net zero emissions. We need some of these big companies to change their business models and produce products with the future in mind and lowering carbon emissions, etc.
Yeah, it sounds like obviously you, as a fund manager, you need to have philosophies around that and be able to then communicate that out to the market and to advisors. Yes,
you do. Yeah, I think there's and that's a number of levels. The governance side remains important. So I think we spoke earlier about how ahead of the game a lot of Australian investors are. So governance and how we engage with companies through proxy voting. We need to make sure that our shareholdings count. And what you've seen over the past few years is a lot of industry bodies evolve to really influence how companies behave and how they are transitioning for the future. So probably a great example just recently, BHP, they've been looking to exit fossil fuels and have done a deal with Woodside. That's still not effective yet, but likely from next year, we're going to have BHP as really a more of a pure play kind of metals miner, and I think that then makes it able and eligible for a lot of other strategies that it might otherwise not have been allowed to reside in. So we saw that as well with Woolworths just recently, with them spinning off Endeavour Group, their alcohol business. I know in our own ETF, Rory, Woolworths was excluded because of that alcohol exposure. We're about to sit down and review those exclusions again, and look, Woolworths will be back permitted as an investment because it no longer has that alcohol exposure. So this is happening, everywhere. Not just us, but a lot of companies are looking for companies to have the right exposures and kind of avoid those sin or the areas that do harm, like tobacco as well. So I think it's been a major theme, and it's really driving where superannuation funds and other firms invest their money. So I think really understanding that is crucially important.
Yeah, fantastic. Thank you, James, for coming on and joining us in this series. We're going to wrap up this episode, but it certainly does sound like advisors, there's a lot of work to be done, a lot of reading to be done, and a lot of understanding to be able to cut through the marketing and promotional side to get to what's actually lying underneath the messages. So thank you, James. We look forward to catching you in the next episode.
Thanks, Fraser.